Hey traders, welcome to this week's FX commodities and crypto game plan. Starting with the dollar, obviously we've seen a little bit of a rally, and it's kind of on the back of the Evergrande saga that's happening in China at the moment, which feels like potentially a little bit of a debt crisis that is emerging in China, which would probably have a little bit of a contagion effect heading into the rest of Asia, and I think much bigger in terms of going in towards the rest of the world as we see a sell-off here. And that's kind of why we're seeing the dollar continuing to rally from those regions we were speaking about last week, where we were looking for a little bit of a bounce out of this region with upside targets of around about the 95.5 handle, somewhere around there. That's potentially going to be a topping point for a temporary pullback from there before we take off. But structurally speaking, we may even take off from this, depending on if this was an A wave or actually just a wave failure. And this was the start of the move to the upside. So you definitely want to be long the dollar here and see how the dollar reacts at that 95.5 handle. If we do see a pullback, we can get out on shorter term profits and look for a buy from this 91 region, because the structure then is playing out perfectly for a much bigger move to the upside. But as it stands, dollar on the move this week and should continue to be on the move this week. Fits our euro US dollar short, putting it in well in the money at the moment, which is looking really good. And that should continue throughout the week. Again, structurally speaking, we're seeing a move down towards 115 on the euro US dollar in the short term. Potentially a bounce from there, given the structure that we're seeing. But again, obviously, if we look at this as a wave failure, this may all just be the first move to the downside. We may not get that bounce. So you definitely want to be short and then manage your trade around that 115 region. Pound US dollar started to see a pullback, no real structure in terms of where we headed from here. Potentially looking at this as a little bit of a more complex ABC, which will fill in with the euro US dollar structure. You have this impulse down, choppy move up, impulse down as your B wave, and then a move up as your C wave, which matches the euro, as I said. So we'll be watching for that, and maybe we can look for a pound sell at this 140 level once we see a move back up there. Aussie dollar, US dollar continues to fall well into the structure that we had laid out and starting to put our trade into the money this week. Good to see, and that should continue to move quite strongly to the downside. The Aussie looks really weak at the moment. The Aussie stock market, the ASX, looking really weak as well. So I'm thinking contagion from the Chinese fallout heading into Australia moving forward. New Zealand dollar also looking pretty weak, and a nice little setup, a very, very clean structure. These Aussie and New Zealand dollar and US dollar CAD structures are not looking for another US dollar move. So they should just continue from here. Their structures are complete, very nice, clean ABC corrective structure, and very nice downside on the cards here. There was a nice little flag set up here to trade if you were in it, but we were focusing on other trades. That trade is also looking really good. US dollar CAD, getting that upside we were looking for. We just said last week that we should put a wider entry order in to wait and see what this little lower time frame structure does. And it looks like it's just breaking higher from here. So upside target for this trade, very much in terms of near the highs, maybe even beyond that. So this is a longer term trade. Nice 8-to-1 risk reward. Definitely looking like it's going to get some legs to the upside from here, given that we're breaking out of this big consolidation and the rest of the commodity trades and commodity pairs are looking really weak. So that's looking like it's going to break higher. A little bit of a wider stop just in case we do get that little bit of a pullback to match this one here. So we'll be watching for that moving forward to see how things are going to play out. But again, if you look at all the other kind of commodity pairs, you can see that you can see that potentially is just a triangle, and I'm just going to break cleanly up from here. US dollar yen still kind of chopping around, still kind of figuring out what this little structure is on the lower time frames. A little bit of a mess. Initially or eventually we'll see a resolution to the upside. It's possible what we saw here was this being structure, which is actually a kind of lower time frame ABC correction, that entry order above the highs still valid and still in terms of the upside targets. Members will know about this in the lessons. Worth looking once again at that little breakdown of the structure and what we expect in the US dollar yen moving forward. Silver, nice little dip this morning. A little bit of a counter rally going on at the moment. I don't think that's going to be of any concern, but that does look really good for continuation to the downside moving forward. I'm very, very bearish. Silver, remain bearish, and those two should start to move to the downside over the next kind of month, 2 months. Definitely start to see some downside there. As you can see, the rest of the precious metals, copper, platinum, palladium, all getting hit this morning. Resources taking a big hit on this China debt situation. Obviously, less demand for China. We were looking at in the chart. We're starting to see that playing out now. As you can see, platinum a long way off the highs, already 30% off the highs, and that should continue moving forward. We should see new lows down towards the $500 region in platinum. Platinum downside target, it's around about 1780, but very easily could go into expanded territory, especially if platinum's still going to move quite a bit. So 1500, maybe even down to 1000 is a potential on palladium moving forward. You can see how that structure's played out really nicely. Moving away from the dollar, euro, Oz, we're just waiting for corrective structure to kind of play itself out here before we look for euro, Oz long. Structurally speaking, not much. Maybe you could look at this as a expanding triangle in there, but it's too small to be of anything significant. So I'm not huge on that trade. I'd really like to see a much bigger corrective structure before we look to get long. We were looking for Euro New Zealand short out of this bigger structure. We were waiting for a corrective move to kind of break through this length of time. And in terms of the structure, it's actually looking like a pretty decent expanding triangle that's formed here. So we'll be waiting for this to develop throughout the week. Entry order below these lows, I think, is valid and should get you some pretty decent downside. It might be a bit choppy. You might need a little bit of a wider stop, but you should get downside here down towards kind of 154, 152, somewhere there. So pretty good trade there. Euro Swiss continues to break higher. We're looking for this to give us a little corrective structure. Still waiting for that, but that's a nice long trade once it kind of gives it that corrective move. Euro pound still chopping around, still expect a little bit of upside here. We took break or close to break even, took small profit on this trade because of the structure, but it's starting to break higher now. You might find that you get a little bit of a move higher, but structurally speaking, it's not very strong. And I'm actually looking to find a sell somewhere in this region, somewhere down here. So all of this is shifting. So looking for the sell from kind of 86.50, somewhere around there. Euro yen continues to fall, so nothing really going on there, waiting for clarity there. Pound Oz, still waiting for this bigger corrective structure to give us entry order for the pound short. Pound New Zealand, kind of the same thing. Nothing really developed there just yet. Pound Swiss, waiting for a rally up towards 131 to get short there before the structure kind of completes itself. Looking for the short trade from there. Pound yen, I think potentially has room to run to the downside here. So entry order below these lows, I think, is also valid. It's just about where we're going to put our entry or our stop loss, because the structure is an absolute mess. So I'm going to give that a couple of days to play out before we decide what's happening there. Aussie dollar yen breaking lower, as we said last week, because the New Zealand dollar yen looked weak and the Aussie dollar New Zealand looked weak. You'd want to trade this to the downside, and that's starting to break lower. I never traded it myself. The structure wasn't ideal, but you can see how that mentality of, well, if we are looking at this as a New Zealand dollar yen as a nice setup, which we did take, then the Aussie dollar yen could be even more bearish, even though the structure isn't ideal. just giving you a very, very running flat type structure. And it did actually get into our sell zone, or close to the sell zone you would look for. So we actually took New Zealand dollar yen, which is running nicely in the money now, and looks really good to continue to the downside. Obviously, risk off going into the markets. New Zealand dollar yen, Aussie dollar yen are going to benefit from that, or those shorts are going to benefit from that. CAD yen, kind of looking like this expanding triangle structure is playing out. Not a massive fan. I'd much prefer the Swiss yen, which is obviously running in the money quite nicely for us now and should continue to move nicely for us. So I'm just going to take CAD yen off the list. It's just too much of a mess. Oil. Our oil long is a little bit underwater at the moment, a little bit concerning in terms of the structure, because we do have, as we've been warning, we have this ABC structure here that potentially has some downside lined up for it, especially from this area here towards these highs. So I'm a little bit concerned about this trade, especially with what's happening. But at the same time, we also have a really nice long setup. If you go to the higher time frames, especially the daily, you can see how we have this impulse. We have this nice big running flat, and the impulse to the upside will take us to $100 oil. But everything that's happening in resources and the potential for a shock to kind of demand if China starts to break down, this means the lower time frame structure will play out, and we'll see things moving to the downside. So kind of on the fence, waiting for this to kind of sort itself out. If we go to the lower time frames, the hourly, it is looking a lot like an A, B, C, D, E corrective structure, kind of triangle setup for further upside. But if this starts to meaningfully break down, then I don't want to be in this. I want to be out. So actually taking half risk off the table, cutting the stop loss by a half, so reducing our percentage down, our percentage risk down by quite a bit, and we can get the benefit of the upside while reducing risk to the downside. Because from here, from this breakout, we shouldn't see a move down to 72 before breaking higher, although it is possible given the structure that we have here. So a very, very mixed bag on oil. So I'm going to put my stop loss tight. If I get taken out, I'll put a re-entry order above the highs, and then that'll be nice and safe because we should get upside. Or if we do get that taken in, then we should see meaningful upside. And if it just continues to fall from here, we won't be in. So that's how I'm going to be managing that trade moving forward. Asian debt crisis 2.0. Why I say that, just to show you quickly, Aussie index, equity index, very, very clean structure, and it looks like it's ready to break lower. And then when we go into the lower time frames, you can see how we've broken this uptrend to the downside quite strongly so far, potentially some meaningful downside to come. Nikkei, still kind of messy on the Nikkei, but if we zoom on the lower time frames, but if we zoom out, you can see how we have a corrective structure that could see the Nikkei kind of double topping here and moving down towards 1800, which is a 41% drop. Shanghai Composite, absolute mess. Not going to really look at that too much. Nifty, just really, really overcooked here. Could easily potentially fall. But something like EEM really starting to play out in terms of our structure. You can see EEM is very much in line with Chinese equities. So you could see how a big move in China would show in EEM, and the structure itself is showing a very, very big move here. On the higher time frames, kind of 63% drop. And when you look at the lower time frames, you're seeing a little bit of a corrective structure playing out for continuation to the downside, which we've been signaling for some time, basically since April. I think we've been watching for this move. Hong Kong breaking down, and higher time frame structures just as bearish in terms of big moves to the downside to come. For downside here around about 42%. Another one we were looking at was the US dollar Korean won breaking higher out of this massive kind of triangular corrective structure. It's A, B, C, D, E. And then on the lower time frames, you have this break higher, you have this ABC corrective structure, and now it's breaking higher there as well. So lots of signs that we're going to see some really, really distressed economies in Asia. And I think that's going to kind of spread out into dollar strength moving forward. Even these emerging markets market equity corrective structure, very, very clean. Clear. When you go into lower time frames, one core strategy at the academy, as you can see here, we are breaking higher out of this a little expanding flat ABC corrective structure. So watching for this to break higher as it is, and should continue to break higher. So lots of signs that we're seeing a little bit of distress this week that should continue over the long term. Bitcoin is another one, ABC corrective structure, going into a lower time frame ABC corrective structure, both expanding flat, both breaking to the downside, which should see continuation to the downside moving forward. I still have downside targets sub 20 on Bitcoin, and that looks like it's starting to play out this week. Same with Ethereum. We started to see some pretty decent downside in Ethereum, XRP, ADA, all the cryptos basically breaking lower. So you can start to see how things are breaking down and going, I think, towards a deflationary shock as a result of this China thing, this China episode. And when you go to gold versus or copper gold ratio, you can see copper gold ratio is a setup that could really break down from here. When we go into lower time frames, you can see this kind of head and shoulders, lower time frame structure starting to break down. If we get that deflationary shock to the downside, then the dollar is going to rally, and we're going to see some very interesting things in the market. It's cool, guys. As you can see, very, very risky markets at the moment. Some very, very big opportunities on the table at the same time. I'm long the dollar, short resources, and short emerging markets. And that should play out this week in a big way. I think this week is going to be a big one. So we'll see how things move forward. Cool, guys. Have a good one. Stay safe. Members, we'll see you in the members area tomorrow for our strategy session. If you want to join, if you want to be a member and get involved, I will post the link in the YouTube description.